All right, let's talk about something that can be a real game changer for anyone hoping to buy a home in the Bluegrass State, the FHA loan. We're going to break down exactly what it is, how it works, and who it's for, pulling all this great info from Kentucky mortgage expert Joel Lobb. Let's dive in. So, you're thinking about buying a home, but maybe it just feels a little impossible. That huge down payment feels like a mountain, and who isn't stressed about their credit score being good enough? Trust me, you are not alone in feeling that way, especially if it's your first time. So here's the plan. We'll start with the problem, then we'll define exactly what an FHA loan is. After that, we'll get into the nitty-gritty of how you qualify, what it costs, and finally, we'll lay out the pros and cons so you can see if it's right for you. Yeah, those hurdles, the down payment, the credit score, they are very real. They're exactly what can make homeownership feel like it's for somebody else. But what if there was a path designed specifically for people who are just starting out? Or maybe for those who've had a few financial bumps in the road? Well, that's exactly where the FHA loan steps in. Okay, let's get right to it. What is this thing? Now, a common mistake is thinking this is a loan from the government. It's not. It's a normal loan from a bank or lender, but it's insured by the government. And that insurance gives lenders the confidence to offer mortgages with way more flexible terms. FHA stands for the Federal Housing Administration, and really their whole mission is just to make owning a home possible for more people. By insuring these loans, they swing the door wide open for folks who might not qualify for a conventional loan, giving them a real shot at owning a home right here in Kentucky. All right, let's get into the specifics. This is the part you've probably been waiting for. How do you actually get one of these loans? Well, it all boils down to a few key numbers and rules that are a lot more forgiving than you might think. And this is the number that gets everyone's attention. Just 3.5% down. Let's put that in perspective. On a $200,000 home, that's a down payment of $7,000. For a conventional loan, you might need 20%, which is $40,000. That is a massive, massive difference. And get this, if that 3.5% still feels like a stretch, here's one of the best features of the FHA program. 100% of your down payment can be a gift from a family member. So if your parents or a relative want to help you out, that money can go straight to getting you the keys to your first house. Okay, let's talk credit score. Now, this is where it gets interesting. Technically, the FHA itself doesn't set a minimum score. But, and this is a big but, the lenders who actually give you the money, they have their own rules. They're called overlays. And for most lenders, to get that sweet 3.5% down payment, the magic number is going to be around 580. That is a much more achievable goal than what you'd need for many conventional loans. Want another way to keep cash in your pocket? The FHA actually allows the seller to contribute up to 6% of the home's purchase price to help you cover closing costs. If you have a good real estate agent, they can often negotiate this right into your offer, and it could literally save you thousands of dollars at the closing table. Next up, debt to income, or DTI. Sounds complicated, but it's simple. Lenders just want to know how much of your monthly income is already spoken for by other debts, like car payments or student loans. The standard FHA guideline is around 31/43. But here's the kicker. If you've got solid credit, that total debt number can sometimes stretch all the way up to 55%, which gives you a lot more buying power. And just a few other key rules to keep on your radar. You'll need a steady 2-year work history. Doesn't have to be the same job, just steady work. All your income has to be on the books and verifiable. And this is a big one. The house you buy has to be the one you're actually going to live in. This isn't for investment properties. Okay, so we know how to qualify. Now let's talk dollars and cents. How much house can you actually buy with an FHA loan in Kentucky, and what are the long-term costs you really need to be aware of? So for 2025, the FHA loan limits are the same across all 120 counties in Kentucky. Over $500,000 for a single-family home, that's a pretty good amount. But look closer at those other numbers. This reveals a really powerful strategy. You can use an FHA loan to buy a duplex, a triplex, or even a 4-unit property. Live in one of the units and have your tenant's rent help pay your mortgage. It's a game changer. Now, there's no free lunch, right? This is the trade-off for all that flexibility. FHA loans require 2 types of mortgage insurance premium, or MIP. There's a one-time fee upfront, which you can usually just roll right into your loan amount so you don't pay it out of pocket. And then there's an annual premium that's just broken up and paid monthly as part of your regular mortgage payment. You know, life happens. And one of the great things about FHA loans is that they're kind of built for that. They're all about giving people a second chance. So if you've hit a rough patch, say a bankruptcy or foreclosure, it doesn't mean you're out of the home buying game forever. There are waiting periods, sure, but they can often be shortened if you can show there were circumstances beyond your control.
All right, let's pull all this together. We've gone through a ton of information. So now let's put it all on the table and look at the good, the bad, and the really important rules you need to know.
So when you really get down to it, it's a pretty clear trade-off, isn't it? The pros are all about getting you in the door. Low down payment, gift money is okay, flexible on credit, and even help with closing costs. The cons? Well, that's the price of admission. You have that mandatory mortgage insurance, and the house itself has to meet certain FHA standards and loan limits.
And let's hammer home the rules for the property itself one last time. Number 1, you have to live there. It's your primary residence, period. Number 2, you've got 60 days after closing to move in. And finally, the home has to get a thumbs up from an FHA-approved appraiser who's just making sure it's safe and sound.
So, the big question, is an FHA loan your key to owning a home in Kentucky? After looking at the incredibly low barrier to entry, the flexible credit rules, and all the perks, for a lot of Kentuckians, especially first-time buyers, the answer could be a big, loud yes. It's a program that's literally designed to turn that dream of homeownership into a reality.